Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. We are all beaming because it's Friday. Just to get back to business, the Asian markets and the global markets as well as the domestic results season. Today is the last day of the results, the very important results season, the half-year results season. And cues from everywhere are mixed. As you can see, the Asian markets, a mixed picture. The results, as we will tell you, largely mixed. I mean, there's an odd page, which is good. You can argue that Bharti is not all that bad. ONGC is also mixed. So there are some positives. Glenmark, very good. And then there is the long tail of not so good results. So everything is a mixed bag and largely the results could be factored in. For me, I think the markets will lie in wait for the Essar Steel judgment. That is seminally important. One big reason why India moved up in ease of doing business from 140 or 130 to 100 and below was because we had put in a stress resolution, a resolution process. Now that resolution has been taken to the cleaners, as it were, in the Essar Steel case. It ought to have been resolved in 180 days. It is today 900 days. I mean 900 days. More than 3 times the amount of time allotted initially. So today we actually need a judgment and we need a good one. The main balance is between how much banks will get, that is financial creditors, and how much operational creditors, that is people who are regularly servicing, providing, say, watchman services, those who get paid monthly. What is the balance between the two? That's what the court will likely decide. If the decision comes in favor of the bankers, in favor of the financial creditors, and if some clean rules are written as justification to that division, then today we have a very good day. My own sense is that while we keep blaming everybody for the slowdown, global and domestically, perhaps cronyism and poor judgment of banks, etc., bureaucracy, one of the key reasons why India has been held back is that we don't know how to resolve stress. Our resolution process is a funk. For non-finance companies, we have an IBC which is taking time. For finance companies, we don't even have an institution. So, if a Bhushan Steel or an Essar Steel or any of those big companies don't work, it is not just their output. It is the whole ecosystem. The Udupi hotels, the auto rickshaws, everything comes to a standstill. So we are not recognizing that not being able to resolve stress is a very big reason for our slowdown. And therefore today the judgment can hold the key to perhaps improving the process of stress resolution. It is not enough. This judgment will apply only to Essar. Maybe rules will have to be written to apply them to other cases. So my own sense is that today we are in a seminal moment in terms of our economic development.
Okay, well, that'll be the big thing to watch. We'll also talk in greater detail about the exposure that different banks have, etc.
Yes. I think it'll run out for, the table is ready, it will run for you. Yes.
Okay, in a bit we'll show that to our viewers as well. But I take your point that today could be a green day. The SGX Nifty is indicating that as well, up almost about 0.2%. And yesterday we saw some buying on dips as well in the market. The Bank Nifty was up over 200 points. A lot of heavyweights, ICICI Bank, Infosys, HDFC Bank saw buying interest. And the numbers look good. So after many days of selling, the domestic institutions have come back in a small way. About 80 crores of buying is what you saw from DIIs yesterday. So we'll keep that on our radar as well. The FIIs, though, continue to sell about 560 odd crores. Anuj, morning. This is clearly a buy on dips market, something that we've seen for the last couple of days. What's the sense you're getting about how things could go today?
Morning, Sonia. Well, it's the first day of FIIs selling after continuously buying. So that is... for me, because the call has been that FIs would buy and DIs would sell. So in the near term, there's a bit of a, I would read it as a bit of a halt in momentum.
Okay.
I think the last 2 days, the market showing you the signs that while the buy on dips is intact, it's more of a buy on collapse. Yesterday, the market gave you 2 collapses, and then you saw those buying. So I read this as a consolidation phase within a one-way rally that we've had. And the 20-day moving average of 11,770, I think, remains sacrosanct. But the feeling I'm getting is that the market may want to test that. So trigger could be anything; it could come from anywhere. But we've had one swing. I think now for the second swing, the market needs to perhaps retreat a bit before making one more attempt on the upside. It may even break 11,770 as a fake sort of or a false breakdown before going up once again. So what are the levels to watch for the Nifty? Yesterday's high and low, that range was 11,800 to 11,895. The reason I'm putting this number, and also on the Bank Nifty, yesterday's low and high was 30,338 and high of 30,800. The reason I'm putting these numbers on table is because yesterday we had weekly options expiry, and in the last hour we had that miraculous uptick, and today SGX Nifty is indicating we'll have a gap up. So if we start above 30,800 on the Bank Nifty and above 11,900 on the Nifty, in that case the risk reward purely from trading point of view may not be in your favor to go long immediately. You may want the market to dip a bit, give you that decline. The market will give you that decline. It's very clear for last 2 days that this decline coming for some reason. So that's where you need to buy. Also, one thing which has happened is this Bank Nifty divergence. We were talking about how some of the weaker banks were rallying. I think that has reverted back now. We've started to see RBL Bank yesterday, for example, IndusInd Bank, Yes Bank. These are the stocks which have again started to fall, and ICICI Bank and HDFC Bank are gaining. So that's why the Bank Nifty has become strong again, because at the end of the day, good banks are rallying. So that so when 40% of the Bank Nifty rallies 1%, that's a straight away 0.5% gain for 0.4% gain for the index. So that's why the Bank Nifty has become a bit more stronger. But I take Lata's point. The market may want to just wait for that SR judgment. That's a very important judgment, and not just from State Bank of India's point of view, but in general sentiment point of view, before taking any large or aggressive position, perhaps on the index.
Yeah, and just to add, it's likely to be a long judgment, so we may not understand it instantly. You may get a précis instantly, but it may take us the entire day or entire morning at least, to understand the nuances of that judgment.
What time is it?
10:30 is it's listed for 10:30, and hopefully the judgment will be at 10:30.
Okay, well, let's see what comes out of that. That will, of course, be the big thing to watch out for. But on that note, let's take a look at what our wise experts have to say as we get into trade this morning. Amit Sachdeva of HSBC says the macro slowdown has prolonged and risk aversion remains the dominant theme. He says recent rebound in prices is due to the benefits of the tax cut. He adds the market is likely to remain in a short-term vulnerability phase for now, but the government steps will improve the medium-term outlook. They stay neutral on India in the regional context.
Okay, neutral is better than negative. Let's get you money market views. Kamal Mahajan of Bank of Baroda says, due to unwinding of longs post Moody's change in India's outlook, the rupee depreciated 1.3% during that week. Today's range is seen at 71.80 to 72.20.
On the bonds, Kamal Mahajan says, despite nervousness about the budget deficit numbers, hopes of further repo rate cuts by the RBI is keeping the bond yields range bound. Today's range for the 10-year benchmark is seen at 6.47% to 6.54%.
Okay, here's Nigel with the world view.
Well, the US markets ended more or less mixed. We had only the Nasdaq that ended with some green. In fact, mildly in the red, but the S&P ended with some green in the overnight trading session. A couple of points to ponder on overnight. One, in fact, was that the US-China trade wars, that in fact continued overnight. There was no clarity whether or not they were coming up with a deal. And the other couple of stocks that were in focus were Cisco and Walmart, both of them trading at fresh all-time highs. But in fact, Cisco cut its guidance, and that's why that stock was down nearly around 7%. Walmart as well did see some profit booking post its numbers. Now, US and China, they struggled to reach a phase 1 compromise. That's what Financial Times is reporting overnight. But early this morning, in fact, we get some news that China has lifted the ban on US poultry, meat and eggs. And the US estimates that this, in fact, could give them, a value of nearly around $1 billion in terms of exports. We'll keep an eye out on that front. Producer prices, that was up close to around 0.4%. That rose the most all the way since April 2019. So that was a positive data point that we saw overnight. And in fact, if we're moving on to some of those European markets, they ended in the red overnight. But the German GDP data, that was a little bit better than what the street was working with out there. So we saw a mild positive reading versus expectations of a negative reading, and that avoided a technical recession. In terms of stocks in news, Daimler, that stock was down more than 5% odd. They announced some cost-cutting program that wasn't taking very, very favorably. This morning, we had most of those Asian markets mixed. Now we have the Kospi that's moved to the high point of the day. Even the Nikkei is up close to around 0.7%. In terms of other asset classes, the dollar index, that's shown some weakness. The yen as well has shown some strength, so keep an eye out on that front. SGX Nifty indicating a positive start for the time being. Back to you guys.
Oh, we can take that positive with both hands. Thank you very much, Nigel, for the global cues. It looks like a slightly positive because the dollar is slightly weak. But we're getting you more opinion from global experts. CLSA's chief equity strategist, Adrian Moat, says he's not surprised that inflation has breached RBI's medium-term comfort zone. He tells CNBC-TV18 that he does not see a cyclical pickup for the Indian economy at the moment, but adds that the real estate sector is showing signs of a potential uptick. Well, listen in. He's one of the best observers of the Indian market.
This is another disappointing economic data point from India, and manufacturing has definitely been leading the slowdown. So to some extent, we're not surprised, as it's been part of the ongoing trend. Right. And so for markets like India, but I'd also suggest Indonesia as well, global investors like these economies because of their high underlying trend rate of growth. I think for me as the strategist, and I'm thinking more about what's happening in capital markets, what that means is bond yields move lower, and it probably means that earnings get revised lower. And so you end up with this story that we've got in a lot of capital markets where the outlook for economic growth looks less certain. There is an impact on the earnings and the earnings yield, but at the same time your discount rate is going down. Right. And so the equity market doesn't get as troubled by the bad economic data because of the movement in interest rates. The overweights that you've currently got either discount what you're expecting to discount, so they perform very well and you decide to reduce them, or the thesis you had for being overweight is not working. Right. So you might then, India might look relatively better because the overweight country has looked relatively less attractive. Okay? Got it. The second thing is there a delta in India that makes this market look more attractive, that it's going to encourage more funds to come in, maybe because of positive earnings revisions? And that would really need to be a cyclical pickup. And at the moment, I'm struggling to see that. The only area where we think there's some signs of potential cyclical pickup is in real estate. So real estate's had quite a troubled period. Right. We've had new regulations around real estate, which are structurally actually quite good and help the potential home buyer.
All right, that's the view coming in from Adrian Moat. Let's do one thing. Let's take a quick break. On the other side of the break, our list of top